I'm Liz McDonald in for Neil Cavuto. Jonathan Hoenig says he saw this coming, and he has 3 words for you. Told you so. Joining Jonathan are Tara Dowell, Tom Belesis, and Quentin Hardy. Jonathan, you told us so.
Well, Liz, reality exists, and it can be evaded, but eventually the bills come due, and when they do, everyone is affected, including those making under, wait for it, $250,000 a year. In fact, they're already going to be affected, as we know, as these tax cuts continue to expire, whether it's on capital gains, on dividends, marriage penalty has been discussed, tobacco taxes we know have risen. So, yes, get ready not only for the spending to continue, but for taxes on everyone to rise as well.
All right, gang, I think we've got the statements from the senators. We want to show you exactly what their quotes are. First up, I think we've got the Senator Dianne Feinstein, a full-screen quote from her. I want you to take a look at what Senator Feinstein and the rest of the senators are saying about taxes could possibly go up. She's saying you could go lower, too. Why not $200,000 with the debt and deficit we have? You can't make promises to people. Next up, let's take a look at the next quote. We got Senator Dorgan. I don't think there's any magic in the number, whether it's $250,000, $200,000, or $225,000. Larger question is whether we'll be able to extend the tax cuts for middle-income folks. We've got more quotes for you, but we want to get to Quentin Hardy. Quentin, what do you make of those comments out of these senators?
Well, you know, I do think there's been a mistake here all along on the part of the Congress and the presidency, not just this one, but the previous one as well. $200,000. What percentage of people in this country make over $200,000, Liz?
You tell me.
About 5? Would you call 5 the middle? These are rich people. Let's not kid ourselves. They're the working rich, and they're important. But let's not call this middle class.
Actually, I think that's about 8%.
For the rich.
But I think it depends on where you live, too, because that could be pushed into the middle class if you live in New York City or San Francisco. Right, Tom?
Absolutely. I mean, let's call it how it is. I mean, Congress knows what they're doing. I mean, at the end of the day, this deficit commission should disband and close itself down. It has zero credibility. It's being run by a bunch of hysterical deficit hawks that want to send us to a dark age with their own selfish agendas. I mean, let's call it how it is.
All right, Tara, what do you think?
Well, first of all, the Deficit Commission is bipartisan. Representative Paul Ryan serves on it, and so I would hardly criticize him if I were someone who was conservative. I think he's been carrying the mantle for conservatives. The larger point here is that Democrats don't disagree that we need to cut spending. That has never been an issue. The issue has always been timing.
Or
when do we do it? When and what
yeah.
spending to cut? But we don't have a problem with cutting waste, and I think it's premature to be making assertions based on the comments of 4 senators. Senators are in the paper every day making different statements. We should wait until the Deficit Reduction Commission actually comes out with their report.
But Quentin, I want to get back to you because Quentin, you know, ADP is saying that essentially small businesses have been lowering their payrolls by about $20,000 a month, and the small businesses are in those upper brackets. They're the engine of job creation in this country.
Well, small businesses are business taxes. We're talking about taxes on individuals, aren't we, Liz?
No, they basically LLCs or limited partnerships. A lot of them can be taxed at the upper bracket.
Well, let's spin the whole thing back. You remember when this law was passed? I'm old enough, too. I think you are, too. And they said, we'll see how it goes and we'll review it. Well, let's see how those tax cuts worked out. The average working American saw no improvement over the last 10 years. When we passed them, we had a massive surplus. Now we've got a massive deficit. Clearly, they didn't do what was promised in them.
And what's
so
the
why are we
remedy,
keeping
though?
them?
But Jonathan,
why are we keeping something that didn't work?
Jonathan, quickly, from 03 to 07, I think that the federal tax haul from the Bush tax cuts was more than $700 billion, according to the Wall Street Journal, no?
Yeah, and I think that's what's so disappointing, Liz, is that take a look at the macro direction in which we're going. It is higher taxes, and it is lower investment returns for everyone across the board, the high and the low end, because even if your personal taxes
return to the tax rates when times were better.
Let me finish, if I could. Even if your personal tax rates don't go up, you are affected by slower growth, by higher inflation, by a weaker currency. That punishes even those at the very bottom of the income.
I want to get Tara in here. Go ahead.
Well, first of all, a lot of the profits, as we can see, even though the Wall Street numbers have been somewhat mixed lately and in a downward trend, but we see its profits and earnings are up. Bank of America talked about it. They issued a report.
But the CBO is saying slower economic growth at 2%. Tom, isn't that a big deal?
It is. I mean, you know, raising taxes and spending cuts, all that's going to do is balloon the deficit on top of what it already is. We need to cut taxes and incentivize entrepreneurs to get out there and take risks in the economy. That's what we need to do, not raise taxes. That's the opposite of what's going to make us good here. It's not going to happen.
Didn't we do that in 1937?
We did. And you know what? After World War II, I'll tell you.
All right. Well, gang, you've been terrific. We're going to see you in a little bit. Really smart conversation there. But The Russell 2000 may have had a good day, but it's still in a bear market territory over there, and that's pretty scary because the Russell 2000 is the only index that shows the health of small and medium-sized businesses across the country. They're the very engines of job creation and economic growth. So, Quentin, are you worried?
Yes, I'm very worried, and it's a real portrait of the underlying financial problem in the country. Small businesses can't get loans. They live a lot closer to the bone. The large guys, the ones you see in the Dow, they don't have the same kind of financing problems. But if small business can't get healthy, they will.
You know, Jonathan, Quentin's making a good point here. They can't get any loans. So why are the banks still sitting tight on the cash and not giving small businesses loans?
Well, I have to say, I don't think it's just small companies that are feeling the heat, certainly in the equities market. I mean, the S&P 500, which is larger companies as well, even with today's rally, isn't too far away from that bear market measure. And Liz, that's because despite all the stimulus, all the spending, all the regulation and re-regulation, equities as an asset class, stocks are still tremendously weak. You've got half of U.S. stocks still below their 200-day moving average, more than half of them now at 50-day lows instead of 50-day highs. So just as stocks as an asset class, not a real encouraging picture despite all the efforts from Uncle Sam.
Yeah, I mean, it's sort of like, you know, hide your money. And I wouldn't say in the mattress, Tara, because I think that's way too crazy. But to Quentin's point, why are banks still not lending to small businesses?
It's so funny you would say that. I mean, if you're a marquee company, you can go to the bond market and get money. But if you're a small business, no, you cannot get money.
But why
right
are
now.
banks
Credit
still
is tight.
sitting tight and not lending?
I think because there's an interesting dynamic going on that I think has not been explored. If you look at the price to earnings ratio, if you look at it, it's at a low since the 90s, right? It's the lowest point it's been since the 90s. Yet profits and earnings are high. What is happening is a lot of the stimulus that has been implemented is actually baked into those profits. So banks are concerned that they can't sustain those profit levels after this stimulus runs out. The Fed is not going to keep the interest rate close to zero forever. So there's concern looking forward, thinking into where will those profits be after this stimulus has been pulled back.
Is that what's going on, Tom?
Well, that as well, but I can also tell you, what are the rules of the game? That's what entrepreneurs are asking. I mean, what risk taker is going to go out there, deploy his capital in an environment like this when we don't know what's going to happen with taxes, healthcare costs? People are not going to step up to the plate to take risks now if they don't know the rules of the game. What are the rules of the game? That's what everyone is asking.
But Quentin, are we dealing with a bunch of fraidy cats in this country? What is going on here?
On the part of the banks? Absolutely. Yeah. Well, you know, bankers make choices every day. They get up in the morning hating what they do, hating risk, but having to make money. And they can make money by loaning things to small business, which is risky, or they can basically borrow free, buy treasuries, and automatically make money, which is a choice.
Wait a second, Jonathan. This is, to Quentin's point, this is exactly what the lesson from Japan, how Japan squeaked through its crisis. It basically let the banks and, you know, lend to the government at teaser rates and then just sat tight and made money off those 2%, 3%, 1%. Very tiny yields, but that's the way Japan went through its crisis. Is that what we're doing here with the banks?
Well,
basically investing in treasuries.
Well, if you take a look at our own treasury yields right now, we're almost starting to look like Japan. They go lower and lower and lower. But actually, I think the point is spot on that what is the incentive to take risk in an environment where those who take risks are demonized, are taxed at higher and higher levels, are confused by ever and ever new layers of regulation?
But you know what? I'll tell you, Tara, I hear what Jonathan's making a good point here. But look, American ingenuity and American entrepreneurship didn't suddenly evaporate with the financial crisis. There are great companies still out there that could be invested in.
Well, see, here's what I find ironic, or should I say hypocritical. So one of the things that the government is trying to do is to extend small business lending. They had record lending in the third quarter of 2009 and moving forward through the SBA. The government wants to extend that. That's being held up right now so that small companies can borrow.
All right, gang, you've been terrific. Thanks so much for joining us tonight. Really smart crowd here. Thanks for watching. Scoreboard, David Asman is next. Stay with us.